And back to a developing story that we're following. 2 oil tankers reportedly attacked in the Gulf of Oman overnight. The U.S. Navy's assisting the ships, and oil has taken a big move on the news. Joining us now is John Kilduff, again, Capital founding partner and a CNBC contributor. It was closing in on a 4 handle, John, so probably ready to bounce, and this was a good reason.
Yeah, this is definitely a good catalyst for that to happen. This is the kind of nightmare headline that you don't necessarily want to wake up to.
Does it play out, though, in any way that actually affects supply and demand, or is it just all sentiment at this point?
It's a bit of sentiment, Joe, but what's starting to come out now, though, is, will regular ships be able to get insurance to transit through the area? That's sort of the fallout or the knock-on effect of this. Not necessarily these 2 ships themselves. There's clearly some mining or some smart torpedoing going on here. The damage of the ships that I've been seeing the photos and filming from Rand State TV, among other sources, has the exact same look and signature of what happened a couple of weeks ago.
So if an insurer might be in a position where it has to pay a claim, it probably won't insure the person. That's great.
Yeah, right, exactly.
When do you need it then?
Well, they're saying that there's mines all over the place now in their head. So they're saying we're not going to insure you against going into this death trap.
What was it your forecast, and what was in the analysis to call for $40 oil? Was that what you were looking for in the last 6 months?
The demand outlook for oil in particular has really deteriorated. I've been kidding around a little bit, saying I've been trying to have oil grab the mantle of most damaged asset class by the trade war, the U.S.-China trade war. And I think over the past couple of weeks, we've been able to sort of secure that because the main economies that are getting hit by the U.S.-China trade war fallout are the Asian ones and the German economy, which are the energy-centric demand growth economies. So that's what's really been ratcheted down. Even this morning in the monthly OPEC report, which was supposed to be the sort of top situation for us in oil instead of this, they ratcheted down their demand outlook significantly as well. So that's what's really been hurting oil. And of course, just the persistent 12.4 million barrels a day of U.S. supply has been a firewall against all these geopolitical events up until this morning. Now, we're only at 53. It is a decent-sized jump off the lows from yesterday when we were down pushing on 50, like you said. But, this is going to be worrisome. The curious thing is that what is really kind of who did it, if you will, because it doesn't really benefit Iran to mess up the transiting of the Strait of Hormuz and the oil flows. Because they're going to alienate whatever supporters they had out there, like in the European Union, Asian customers that have been trying to work with Iran, trying to stick with the JCPOA, the nuclear deal, and keep them afloat here.
Okay, so let's get into the conspiracy theories. Who does it benefit?
To the extent you have, forces out there that want to topple the Iranian regime or actors, it benefits them. It gets this game on. It gets the U.S. Potentially to such a state of ire that we attack, and it gets the Saudis what they want, which is an attack on Iran and the Israelis, too.
This is why we're so cautious around reporting some of the events from this morning, because it is still very early on. We should point out that a month ago, when those 4 tankers were attacked, the EU and Saudi Arabia both came to the conclusion that it was Iran. Iran has disputed that. And in fact, Iranian ships have picked up some of the crew from those ships that were attacked today. It happened just 25 miles off their shore.
Right, and Iranian state TV is all over it, filming it and showing footage of
the ship on fire, too.
I mean, it doesn't make all that much sense that they would have done it, but this is what makes this such a tricky commodity at times because of the countervailing influences.
We had the CEO of Canary on earlier today. That's an oil equipment company that provides equipment, I think, for 10% of the wells that have been drilled in the United States this year. He just said that really it even increases the value of the Permian Basin when you start seeing how difficult things could get and how quickly in a situation like that for oil coming from the Middle East.
No doubt, although they are a victim of their own success. I mean, again, oil would be $70, $80 a barrel, Becky, if we didn't have over 12 million barrels a day of U.S. production. I mean, we're just swimming in it. U.S. exports are 3 million barrels a day now. Pretty regularly, you're going to see that number jump to maybe 4 million barrels over the next couple of weeks, potentially, because there's so much ships, VLCCs in the Gulf picking up oil right now that, again, it's a weight against this kind of thing. If we had sanctions on Iran and what we have with Venezuela, the troubles we have in Libya, and some of the other hot spots that pop up like Nigeria, this price would be much higher if it wasn't for the U.S. production. Like I've been saying, the supply of the U.S. has become a firewall almost against these sort of geopolitical events.
Well, it's the new floor. It used to be Saudi Arabia and Russia, but it really is the floor.
As a matter of fact, we're doing so well and so much that the Saudis continue to ratchet down their production to try to prop up the price.